Hey everybody, JJ here, Bull to the Bust. It is Monday, March 23rd, putting out the second report as of today. A lot of news coming out. We're going to talk about how this upcoming downturn in the economy could be worse from an unemployment standpoint, worse than the Great Depression. Worse than the Great Depression. All right, so that by itself is going to equal an unemployment nightmare. We're going to talk about that forecast and who's predicting that. It's not just one person. 30% unemployment projected. The virus is being used as the scapegoat. We've talked about that. We're going to dive into that a little bit more. And it looks like the billionaires got out of the stock market early. We're going to talk about Bezos selling a lot of shares right before the big drop. Just a coincidence? Let's talk about it. The Fed, Bullard, is his name Bullard or Bullard? Either way, he is saying 30% unemployment coming up here in this next downturn. Now, it's interesting with the times that we're in right now, we have so many people out there that are medical experts, so they seem to know how bad or how minimal this sickness outbreak is going to continue to either expand or to be reined in. So we see a lot of predictions. We even saw Governor Newsom out here in California saying more than half of California's people is going to end up being infected. So we have Dr. Newsom, we have Dr. Bullard right here. I'm not going to pretend to be Dr. Boom Bust, but I do want to encourage everybody to prepare for the worst. I have no idea how bad it's going to get. This has to do more with the sickness than it does the actual economy. Yes, the economy was in a bubble. It was bound to burst sooner or later. This just brought the pin much sooner than it would have otherwise with the sickness outbreak. Now, to put this into perspective, this 30% prediction, and even that's too low when you look at real unemployment, but that would outdo the 24, almost 25% unemployment that we saw at the peak of the Great Depression back in 1933, right? And this is going to be, if this comes true, this is going to be a nightmare for America. You're going to see skyrocketing homelessness, poverty. If the sickness outbreak continues to expand, you could see more shutdowns. You know, what if they shut down the food delivery? I mean, that's supposed to be an essential service that they need to have open, but if they shut that down, could you imagine the level of pain and starvation that you're going to see in this country? We're pretty much a country of couch potatoes. People are not used to having to get their own food. People could just go to the drive-thru. People could just go to the grocery store. Well, if this continues, we could see even more empty shelves, and it could get real ugly real quick, even worse than it is right now. Also, to put this 30% number into perspective for unemployment, let's go back to the financial crisis. This is thebalance.com. At the height of the financial crisis, which was about 2009, just after the bailouts began, we saw unemployment hit a high of 9.9%. Then starting in 2010 and thereafter started dropping. So again, that 30% number is going to make it 3 times as bad as the financial crisis. Now, if you want to look at real numbers right now, over at Shadow Stats, they paint the picture of what it really is if you count long-term discouraged workers out of the labor force individuals, people that are underemployed based on their education level and previous experience. The real number is already over 20%. So to go from where we're at now at 3.5, 3.6 to 30% means that the real number is going to go from 20-something% to over 50%. 50% unemployment. We'll have to check in on Shadow Stats here in a few months and see how that plays out. But that's what Shadow Stats numbers are adding up to, right? Because there's the disparity of about 20% in those two readings. Another CNBC article right here, the upcoming job losses will be unlike anything the U.S. has ever seen. So another prediction of this being worse than the Great Depression. Forecasts range from 500,000 to 5 million new unemployment filings. Right now, the carnage in this unemployment is not going to show up until April, because we're going to start seeing the current month, March, numbers come out in April, and that's we're going to see the level of pain. But they're predicting a pretty wide range, 500,000 to 5 million. Probably going to fall somewhere in between there, maybe 2.5 million if I had to guess. It's anybody's guess. But look at places like Michigan, where unemployment has surged over 2,000%? Right here it is, over 2,000%, 2,100% increase in unemployment claims. after the governor issued an executive order. Right? And I'm wondering what these people are going to do in some of these northern states, some of these cold states. What if people run out of gas to heat their homes with? Right? What is going to happen? You could see this get real dangerous, especially in these colder states. Right? Who knows? It could be more dangerous than California. Here, we're probably going to have mobs of gangs exiting the big cities, and who knows doing what? Probably heading out to the countryside and to the suburbs. And I think it's going to get real dangerous. We talked about that a few episodes ago. People need to have self-defense mechanisms in place if this does get as bad as it could happen here. Okay, how's about this article here out of Forbes? This is John Malden. We are facing a depression, not a recession. A depression. Now, it's outlined here in this article out of Forbes here that the big cities are the most dangerous places because that's going to be where the biggest job losses occur. So when the economy is booming, when everybody's running up debts, where there's more people with more credit cards, there's more jobs, right? More people, more spending, more jobs. Well, when the opposite happens, when job losses occur, the cities are the worst place to be. You have more people trying to get what jobs are available. And many of the hardest hit cities, it says out of here, San Francisco, San Jose, Seattle, New York, showed the steepest declines last week that align with the rise in the sickness outbreak. And several of these cities are seeing a reduction in hours worked of 50%, a 50% reduction, right? And these are cities where it's very expensive to live. How long can these people go without pay before they're going to be out there begging for some sort of government stimulus? Right, now, speaking of the government stimulus and the middle class bailout, as we've been calling it here, the stock market did not like it today. The vote did not go through on the stimulus package, so they're still debating the left versus the right on what should be in there, what should not be in there. You got to love our political system, but I'm sure when this does get approved that we're going to see a big jump up in the stock market. And it's just pretty sad that people go out and buy stocks based on government handouts. But that is the world that we're in. Speaking of bailouts, take a look at the Fed balance sheet. We saw the runoff in the balance sheet beginning in 2017, and we see that the balance sheet got down to about $3.7 trillion. And now we've jumped back up almost a hockey stick pattern here. This is a hockey stick pattern, up to about $4.7 trillion in less than 1 year on the Fed balance sheet. So as usual, the Fed's going to come in and pretend to be the saviors, even though it's the endless money printing that got us into this bubble, into this mess in the first place. And now what are they doing to try to solve it? They're doing more of the same. They're issuing more debt. They're buying up more bad assets. They're liquefying the banks so the banks can continue to lend. And there's going to be so many job losses, the banks are going to have to loosen their underwriting guidelines. Otherwise, people's credit scores are going to be so in the tank that hardly anyone's going to qualify for a loan. But you can bet the banks, they're going to try to loosen the lending here. I think when home prices do start dropping, that's when the banks are going to tighten up. Then it's going to be hard to get a loan. And that way the big guys can come in and buy the homes. You know, BlackRock, they'll be glad to buy your home if you get it foreclosed. And they'll be glad to rent it out to you. Don't worry about it. BlackRock's got you covered. They'll buy your home for half price, maybe less. And yeah, they'll turn around and rent it back to you. Yeah, or maybe better yet, maybe Warren Buffett. Maybe he'll be your landlord. You know, he's on record levels of cash right now. He was waiting for this decline. He knew something was coming. Obviously, he got into his big cash position last year. Maybe he'll buy some real estate investment companies, and maybe Warren Buffett will be your landlord. Right? This is going to be the biggest wealth transfer of all time. People are going to lose their homes. Possibly. Now, we'll have to see what the government's going to do. They could come in and say foreclosures are illegal. They could put a freeze on foreclosures and evictions. Right? The government is taking over entire industries right now, taking over the airliners. It's going to be pretty much the government, the Fed, own everything as far as business goes. Right? Might not get that bad, but it's looking like it could be that bad. All right, let's talk about Jeff Bezos and some people getting out right at the right time. Bezos sold $4.1 billion worth of Amazon shares in the past 11 days. Now, this is not the past 11 days from today. This article is back in February. So starting in early February, he was selling billions of dollars worth of shares. What did he know? What did he see on the horizon? Was he tipped off? Well, let's take a look at the stock market and see when the stock market really started coming down. Okay, we're going to look at the Dow Jones right here. Let's go back to the peak right about here, and this was February 10th. So Bezos got out just in time. Remember, he started selling in early February. We saw the peak in February, early February, February 10th. So just days after he started selling, and boom, just lucky timing, or was he tipped off? Right, I think you know the answer. This is how the wealth transfer is done. The big guys, they get out first, and they get out the fastest. But don't worry, they'll be back in the market when stocks crash 70, 80, 90%. They'll be back in to buy up all these shares and ride the market back up here. Nothing to see here, folks. Just a coincidence that Bezos sold just days before the big plunge. Just lucky timing, I guess. All right, everybody, I think you know what's going on. Thank you for watching this update. I appreciate you being here. Appreciate your support. Let me know what you think about these predictions. The next Great Depression is going to be much worse than the 1930s depression, right? Is that just fear-mongering with John Malden over at Forbes writing that article with the predictions of 30% unemployment, which is the official number? The real number is going to be close to 50% if that comes to fruition. Or is all this going to die out here towards the summer? People will be back to work. The Fed, they're going to bail everybody out. Everything will be back to normal. Well, personally, I don't think it's ever going to be the same. I think we might see a lot of other surprises coming up here, which we're going to talk about in the next reports. But until then, thanks for watching. Also, in our next report, we're going to talk about stocks that actually increased with this downturn and see how if we can find maybe a little bull market in this bearish time right now. Thanks again, everybody. Bye for now.